morning to one and all. We are team number 17. Today we are going to overview about timeline of changes in management accounting, effects of the industrial revolution, technology versus decision making, and future developments in management accounting. The concept of management accounting saw revolutionary changes dating back to the time of the Industrial Revolution, and these practices have constantly been adapting to the ever-changing world around it. However, it is possible that the innovations in IT and environmental dynamics might be so overpowering that the necessity for the humanistic factor in management accountant was doubted.
Let us now identify the periods of change in management accounting. There are four grand periods. First one between 1812 and 1920, focused mainly on operating cost and efficiency process. And between 1920 and 1915, how did the Federation of Accounts affect the management accounting practice of this time? Now we've explained in details. Management accounting practice have changed within the years, starting from the 1812 to 1920s, where it focused mainly on operating cost and efficiency process, up until the modern day practice of management accounting, where it discussed about integrated reporting and sustainability, which focused on the combination financial and non-financial information to provide in detailed view of the performance of an organization while maintaining sustainability concept. Although within the recent years, the practice maintained by management accounting have faced criticism due to their failure to adjust to change because of the replay changing environment. Before the 1950s, the International Federation of Accounts described it as the technical activities required to achieve the organization's objectives. It mainly focused on the area of determination of product cost. The product cost was backed up by the budgets and financial control of the production process, which highlighted the product cost.
Okay, let's move another part. During the year from 1950 to 1979, the aim of management accounting shift towards supply of information from planning and stabilizing. Also, there were three major developments since the 1950 on management according to practices. First one, cost management accounting innovation 1950, discount cash flows, total quantity management, custom charts, and optimum transfer pricing. Second one, during the 1960, optimum cost budgeting, computer technology, zero-based budgeting, management by objectives. Third one, during the 1970, information economic and agency theory, strategic business units, metrics organization, and product repository.
Technologies are emerging and affect the world population in different ways, which that influences the world to enhance diversity. The Industrial Revolution that took place in 1760 to 1840, which introduced machines instead of manual labor, was a step that the world kept enhancing the technological powers in the world. Developed by Frederick Winslow in the early 20th century scientific management. Henry Fayol proposed the management principles that on the operations of organizing, commanding, coordinating, and managing. Max Weber developed the idea of bureaucratic management, an outline of interpretive sociology.
The Hawthorne study was an important turning point in the history of the Industrial Revolution. Hawthorne studies showed that environmental and social factors have a significant impact on employee productivity and satisfaction. These findings led to an increased focus on human relationships in the workplace and recognition of the importance of employee well-being achieving business success. Theory X and Theory Y are two contrasting management styles first introduced by Douglas McGregor. Theory X is based on the assumption that employees are lazy by nature and must be closely monitored and controlled to achieve productivity. Theory Y is based on the assumption that employees are self-motivated and can be trusted to work independently and creatively. Peter Drucker popularized the concept of management by objectives, which entail creating clear goals for employees and coordinating them with the overall aims of the company. It places a strong emphasis on collaborative goal setting, performance evaluation, and feedback.
Management accounting procedures underwent substantial adjustment during the Industrial Revolution to accommodate the new industrial environment. Among the most significant modifications are, firstly, I talk about hosting system. The transition from manual production to massively automated production necessitated the development of new costing systems. To capture expenses in a more organized and effective way, new techniques like process costing and standard costing evolved to replace outdated techniques like job order costing. Secondly, I talk about cost control. More effective cost control systems were required due to the increasing complexity of industrial activities. To track expenditures, spot inefficiency, and make work decisions, managers required more timely and accurate information. As a result, methodologies like variance analysis were created to compare actual costs to planned sums and pinpoint areas for improvement. Lastly, I talk about performance measurement. Its methods became more crucial as factories grew and ownership and management were separated. Industrialization demanded more objective and standardized performance metrics as opposed to traditional approaches which frequently relied on human observations and trust.
Okay, I am going to talk about technology versus decision making. In this, the first point is study solutions. If take a practical example in which a business makes those necessary actions should be taken to reduce it. So the necessary information should be computerized so that technology will be able to react to it and try to mitigate it. The other point is that if an unexpected issue occurs, we can't use technology to make decisions as contingency plans can't be strategies to information technology. As computers can't make critical decision making unlike humans.
Now I am going to talk about possible future developments in management accounting. Increased use of automation and artificial intelligence with the rise of automation. When a country is experiencing a shortage of workers due to higher demand for workers in the companies. Then I talk about payroll management techniques. These are the automation payroll process, implementing strong data security measures, and conducting regular audits.
Finally, what I want to tell you is a crucial factor to development management accounting is the development of soft skills for flexible operation within your organization. These can be improved by conducting workshops to improve them as the business environment is a very dynamic place. This concludes our presentation. Thank you, everyone.